Welcome to today's episode. You're sitting at your desk, staring at your computer screen. The market is moving fast, and you are about to make a big decision in option trading. Your palms are sweaty, heart racing. This is not just about numbers, it's about you. Your emotions are as much a part of the game as strategies. But here is the truth: the market doesn't care about your fear or excitement. To be successful, you have to master your emotions. In today's video, we are diving into the psychology behind option trading and how mastering your emotions can turn the odds in your favor. This is not just about charts and graphs, it's about understanding your mind and learning how to control it. By the end of this video, you will understand why your emotional state might be the biggest factor standing between you and consistent profits. 1. The role of emotions in trading. Let's start with something simple: fear and greed. These two emotions are the primary drivers behind most trading mistakes. Imagine you have just bought a call option on a stock you have been following for weeks. You are feeling good until the stock dips a little. Suddenly fear creeps in. What if this goes south? What if I lose everything? That fear leads to impulsive decisions. You sell your position too early, missing out on the eventual recovery. Now think about greed. You spot an option that looks too good to resist. Your mind starts racing. This could be the one. You end up buying more contracts than you should, betting bigger than you can afford. But here is the problem. When fear and greed take control, you lose objectivity. You are no longer making decisions based on logic or strategy. You are acting on emotions. And in the world of option trading, emotions can cost you. Take the example of a trader named Sarah. Sarah had a decent track record of winning trades, but after a few losses, she felt herself getting anxious. She kept checking the markets obsessively. When the next opportunity came, driven by a fear of missing out, she bought options in a volatile stock she didn't fully research. That was a mistake. The stock moved against her and she watched her portfolio drop. Fear led her to chase the market, and greed pushed her to take bigger risks. She didn't end well. The lesson here: you can't control the market, but you can control how you respond to it. 2. Identifying your emotional triggers. Every trader has emotional triggers, moments when they feel their mind is clouded by an instinctive response, whether it's fear, excitement, or impatience. The key to mastering your emotions is identifying what triggers these reactions. Think about a time when you have felt rushed in your trading. Maybe it was during a market dip or after seeing a huge gain. You didn't have a clear plan but felt like you had to act quickly. In moments like this, your brain shifts into fight or flight mode. The result: you make hasty decisions and they rarely end in profits. Let me tell you about Tom, an experienced option trader. Tom's emotional trigger was impatience. Every time he saw an option drop in price, he panicked and sold immediately. He couldn't wait for the stock to bounce back. His impatience cost him hundreds of dollars in missed gains. The key here is to pause and reflect. What triggers your emotions? Is it the thrill of a big win? The fear of missing out on a fast moving market? Recognizing these triggers is the first step to controlling them. Only then can you start making decisions based on your plan, not your impulses. 3. Building emotional discipline. So, how do you build emotional discipline? It's not about erasing emotions. It's about learning to manage them effectively. Here are 3 strategies that can help. 1. Create a trading plan and stick to it. Your trading plan is your safety net. When the market moves fast, your emotions can cause you to abandon your strategy. But with a solid plan in place, you have something to fall back on. For example, let's say you decide that you will sell your call options if the stock dips 10% from your entry price. When fear creeps in, you will remind yourself of that rule. 2. Limit your exposure. Don't put all your eggs in one basket. By diversifying your positions and limiting your exposure to any single trade, you reduce the emotional pressure. You are less likely to panic over a small loss when it's only a fraction of your overall portfolio. 3. Take breaks. It is easy to get caught up in the screen, refreshing, checking, analyzing. But the more time you spend watching the market, the more your emotions can take control. These 3 strategies help you stay grounded. Emotional discipline doesn't happen overnight, but with consistent practice, you will develop the habit necessary to keep your feelings in check. 4. The power of reflection and continuous improvement. Finally, reflection is one of the most powerful tools for mastering emotions. After every trade, ask yourself, how did I feel during the trade? Was I acting out of fear or greed? Keeping a trading journal can help you track not just your profits and losses, but also your emotional state during each decision. Let me share one last story. Jack had been trading options for a year but kept finding himself in emotional turmoil. After every loss, he felt disappointed and frustrated, leading him to make reckless decisions. But Jack decided to take a step back. He started journaling after every trade, focusing not just the results but also on how he felt. Over time, he learned to spot patterns in his behavior, like how fear of loss often led him to sell too early. Through consistent reflection and making small adjustments, Jack slowly turned things around. His emotional intelligence improved, and so did his profits. Remember, mastering your emotions is an ongoing process. Every trade is an opportunity to learn, grow, and improve. The more self aware you become, the better you will be at handling the highs and lows of trading with a level of head. So, to wrap up, 1. Fear and greed are the biggest emotional roadblocks in option trading. 2. Identifying your emotional triggers can help you make more rational decisions. 3. Building emotional discipline comes down to having a plan, limiting exposure, and taking breaks. Continuous reflection and improvement are key to long-term success. Option trading is not just about analyzing stocks, it's about analyzing yourself. By mastering your emotions, you give yourself the best chance to succeed. Keep practicing, stay disciplined, and remember, the more control you have over your emotions, the more control you have over your profits. Thanks for watching. If you found this video helpful, don't forget to like, comment, and subscribe for more trading insight.